Well, how can we possibly summarize a year like 2022 was on the stock market? Today, in this video, that's exactly what we're going to do. We're going to think about the year that was, or then thinking about the 5 key themes to consider for 2023 and beyond for all investors. As we know, it's been a torrid year on markets. The S&P 500 down by 20%, the Nasdaq down by over 30% into crash territory. We've had the fastest rate hike cycle in over 30 years, inflation is persistent, there's been a growth slowdown and uncertainty about potential recessions up ahead. So today, let's unpack these themes and think about what it means for all of us as investors. Hey, okay, we're doing a bit of time traveling here. As you can see, this is a snapshot from the future. Yes, we've had a bit of a haircut along the way too. But just wanted to say that I know we promised 5 key themes to look for in 2023. However, as we got talking for the video, I realized that there was another key bonus theme that we had to touch on. Make sure you stay until the end for that one. It's talking about all things AI, disruption, and technology that I know you all know and love. All right, let's get back into the video. If you're new here, make sure you've subscribed, and just letting you know, we've dropped a new Instagram. There'll be a link at the top of the channel. We provide daily updates on all things markets and news. So if you want to stay up to date and keep up with us, head over there too. Let's talk about the first theme. Theme number 1. Of course, the year that was 2022, it would have made sense for us to start with inflation because that's been top of the mind throughout the year. But I thought we could start somewhere else. Supply chains. As we know, 2020 and 2021 were already really filled with supply chain issues. The lockdowns caused significant disruptions throughout that. As we know, of course, the semiconductor shortage was one that affected so many different industries. Of course, from electronic goods, phones, vehicles. But this year, it centered around the Ukrainian situation. The Ukrainian situation disrupted energy supply chains, as well as, of course, food and resources. A lot of these had inflationary pressures that really filtered through, and it's really driven the inflation issue, which was already a problem, but it's been exacerbated by a lot of these supply chain issues. As we know, this has filtered through to cost of living pressures. Of course, these are not the only drivers of cost of living pressures, but it is top of mind for many governments around the world, and it's been a big issue that's continued through. Theme number 2. Of course, it's inflation this time, but inflation coupled with the interest rate hike cycle. As we talked about at the top of the video, the interest rate hike cycle has been the fastest in 30 plus years. It's been rapid, it hasn't finished yet. There is signs that perhaps we're slowing down, or at least the pace of the rate hikes will start to slow down, but inflation is also still persistent. If we think about where we're at, US CPI, the last print was still above 7%, which is a heck of a long way away from the 2% mark that many of the central banks around the world want to work towards. Of course, as we know, if inflation stays high, interest rates will have to rise. But the question is, are we at risk of central banks raising rates too quickly and too high, perhaps hiking through where we need to get to, which would flow through to theme number 3, a potential growth slowdown. So we need to think about why interest rates are going higher to understand why the growth slowdown is such a risk and one that analysts and economists are continuing to talk about. As we know, inflation serves as a regressive tax, which means that it disproportionately affects those who are lower income earners. So this is why it's important to make sure that we curtail inflation quickly, as well as the fact that once inflation gets out of the bottle, it's very hard to put that genie back in. And so we know that interest rate is one of the key tools that central banks use to curtail that. They're trying to slow down demand, put the brakes onto the economy, and hopefully navigate that soft landing where you see, yes, inflation coming down, but the economic growth is still able to continue on, especially with the economic recovery out of the lockdown period. However, of course, monetary policy, it operates with a lag. So we raise interest rates today, it doesn't mean you instantly see the demand slow down tomorrow. It's going to take time. And so, of course, especially when you're raising rates so quickly, the question is if we raise it too fast, perhaps we raise through where it needs to get to, and then the brakes are being hit on too quickly, and then we're in a real funk for the broader macroeconomic picture. This is the question about how are things going to play out. The consensus view at the moment is for a recession in 2023. If you look across the board, most of the consensus and analyst expectations is for a recession. But the question is this going to be a protracted and longer term, more significant recession, perhaps with some financial instability? Or is this going to be a more shallow recession, perhaps 2 quarters, and then we're back on into the next part? I'd love to know your thoughts. Drop in a comment below. It is a fascinating period. 2022 was a year for the history books. What's up for 2023? There's a lot of questions, and of course, there's many divergent views as well. Theme number 4. Of course, as we know, the stock market's not the economy is not the stock market, but due to all of these uncertainties that we've mentioned in the macroeconomic picture, there's been significant downturn in terms of the stock market as well. We talked about it at the top of the video, headline numbers down by over 20%, but some of the growthier ends of the market, which have been most exposed to rising interest rate environment, are down by over 30% into crash territory. We've seen valuations come down quite quickly, which is fair enough compared to where they got to in 2020 and 2021, where we saw exuberant valuations. We've seen more of a risk-off mode as well across the market. But even though valuations have come down and we've seen a return to what many people are terming as more of a normal period, it doesn't mean that we can't go lower as well. So it's worth noting that too. But of course, feeding into the fifth theme there is the fact that, yes, we've started to see a return to normal, and particularly an unwinding of the most speculative of trades. There was a lot of mania throughout the past couple of years coming out of the lockdowns. We know the reasons why, we know the key drivers why. But of course, if you look at some of the areas such as the cryptocurrency market, the cryptocurrency sector has taken a big hit. Crashes across the sector, and really the FTX collapse has been one of the most significant hallmarks of this past period. But if you look at areas such as the meme stocks, unprofitable technology stocks as well, these growth ends of the market and the more risk-on areas of the market have been those that have been beaten down most significantly. And so the question is, what happens from here? And this is really the bonus theme that I think hasn't been discussed enough of yet, but it's really that other side of the coin that I think we need to think about. It all centers around ChatGPT. Now you might be wondering, why is ChatGPT relevant to this discussion? If you're not familiar with ChatGPT, I'd encourage you to go and have a look at it in your own time. It is a chatbot released by OpenAI, came out in November. It actually was the fastest platform to reach 1 million users. It did that in under a week. But it is a comprehensive chatbot. It is driven by AI, and you can just about get answers to anything through it. It is really compelling, but what's fascinating about it is the breadth of use cases. Whether you're a student, a teacher, an educator, a data analyst, a tech developer, you can find use cases for it, and it can enhance or really optimize what you're doing through that. And why this is so important and a key theme, not only for 2023, but further beyond as well, is the fact that ChatGPT will drive disruption. And now it's not only ChatGPT, but I think it's really embodying this next period of disruption across the sectors. But it's worth noting that yes, the growthier end of the market has been beaten down, but good quality technology, disruptive technology, innovation still has its place. And particularly over this next decade and beyond, we're seeing the digitization of basically just about every sector flowing through. And it's been really fascinating to see how rapidly ChatGPT has been adopted. Obviously, this is not the only thing, but I think it's just really personifying what this next stage of the cycle could look like. And so yes, disruption will still come. Good quality will still float through to the top. But as we've seen now, valuations matter, and it's not everything that will be able to rise, but it's more on quality and the innovation that these products and platforms are able to provide. So where do we stand? Well, that is an interesting question. If we think about where we're at, we are down and down significantly, but it really has been more of a measured move downwards. We haven't had that capitulation, blow off bottom type move where everyone's selling everything and there's blood on the streets. Of course, a lot of the consensus discussion is the fact that we need to see this blood on the streets type move before it signals a potential bottom. But there are other factors as well on the other side of the coin. As we've talked about, valuations have come down rapidly. Yes, we're starting from a significantly lower base than we started the year as well, but there are macroeconomic uncertainties and still big question marks as well on growth. We've seen earnings starting to come through and come down, but we haven't seen that significant earnings reset that a lot of analysts are talking about too. So it'll be fascinating to see what that looks like into quarter 2, quarter 3, quarter 4 next year. And of course, a rate hike cycle as well. We've seen a lot of wording from different central bankers about what that next period will look like. The pace of rate hikes has slowed, but we definitely haven't seen a pause or really the pivot that a lot of the markets are looking for. So ultimately, there's still a lot of question marks. We started the year with a lot of question marks. We've still got a lot of them now. It is a fascinating period. When we think about what the past year has had in store, it almost makes you tired and dizzy to think about. But of course, at the end of the day, this is why we love it. This is why we enjoy the markets, because there's always something new to look at. There's always a new event or a new opportunity to consider. And volatility and the uncertainty does bring opportunities as well. Here's other videos that you can check out after this one. Make sure you head over to the Instagram and say g'day. Drop in a comment. Let us know your thoughts. A big thank you for joining us. And most of all, have an amazing new year. Can't wait to do it all again into 2023. Plenty more videos coming at you. For now, stay well and happy investing.